challenge assumptions and raise a mystery. What if I told you that working harder, earning more, and saving diligently still isn't enough? Millions of people follow every rule they were taught about money: get a good job, avoid debt, save a little each month, yet somehow they end up stressed, stuck, and one emergency away from collapse. Here's the mystery. How can personal finance be so personal, yet millions fail in the exact same way? This isn't about laziness. It's not about intelligence, and it's not about bad luck. It's about a system, a timeline, and a set of invisible rules that quietly shape your financial destiny long before you ever open a bank account. Tonight, we're not talking about budgeting tips. We're uncovering the story of money management itself, where it came from, how it evolved, where it breaks, and why most solutions fail. And by the end, you'll see your own financial life very differently. Setting the stage, history, systems, and teasing twists. To understand personal finance, we need to rewind far beyond credit cards and budgeting apps. For most of human history, money management was simple. You earned, you spent, you survived. There were no retirement accounts, no student loans, no mortgages stretching 30 years into the future. Money was tangible: gold, silver, livestock, land. If you had it, you were secure. If you didn't, you weren't. Then came banks. Banks didn't just store money, they reshaped time. They allowed people to borrow from their future and pay it back slowly. At first, this seemed empowering, but it planted a seed. Because once future income became collateral, financial decisions stopped being immediate and became permanent. This is where modern personal finance truly begins. And this is where the first cracks appear, though no one noticed them yet. Origins: the birth of modern money management. The modern concept of personal finance emerged in the early 20th century. Industrialization changed everything. People no longer earned seasonally, they earned monthly. Steady paychecks replaced unpredictable harvests. Governments and corporations stepped in with new promises. Pensions, insurance, social security, employer stability. The idea was simple. If you work hard and stay loyal, the system will take care of you. Money management wasn't your responsibility, it was outsourced. Then came the Great Depression. Suddenly, those promises collapsed. Banks failed. Savings vanished. Jobs disappeared overnight. For the first time, society realized something terrifying. No system is permanent. Personal finance shifted from trust the system to protect yourself. Savings accounts, budgeting, and financial discipline became moral virtues. But the real transformation was still coming. Rise, credit, convenience, and the illusion of control. After World War II, something unprecedented happened. Credit became mainstream. Homes, cars, education, everything became affordable through monthly payments. This felt like progress. Instead of waiting years, people could buy now and pay later. Life accelerated. But here's the hidden trade-off. Monthly payments replaced total cost as the measure of affordability. This single shift changed everything. People stopped asking, "Can I afford this?" and started asking, "Can I afford the payment?" Debt became invisible. Spending felt painless. Money management became abstract. At the same time, financial products grew more complex. Credit cards, adjustable rate mortgages, investment funds, retirement accounts. The system promised freedom but demanded financial literacy. And almost no one taught it. This is when personal finance stopped being optional and became essential. Yet most people didn't realize it. Takeaway number 1. Personal finance is about structure, not discipline. Success comes from designing systems that work even when motivation fails. Takeaway number 2. Cash flow matters more than income. Stability beats salary. Control beats complexity. Takeaway number 3. Understanding the system is more powerful than any hack. Once you see how money actually moves, fear disappears. Warning, open-ended thought. The most dangerous belief about money is this: I'll figure it out later. Because later is when options disappear. The system doesn't warn you before it shifts. It doesn't pause for learning, and it doesn't reward good intentions. But it does reward understanding. Natural call to action. If this video changed how you think about money even slightly, then the next step isn't motivation. It's education. Subscribe if you want deep explanations, not shallow tips. Like this video so more people can escape silent financial stress. And comment below, what's the biggest money rule you were taught and now question? Because the sooner we stop blaming individuals, the sooner we start building financial lives that actually work.